Last week, there was a number of stocks that made really massive gains. I'm talking about 100%, 200%, even more than 500% in a single day. These stocks all have a few things in common, and this week I'm going to teach you what those things are so that you can spot these opportunities early. Plus, I'll give my regular market analysis and we'll look at the trade of the week on BMGL at the end of the video. All right, so let's dive right into this topic. What are the common characteristics of the stocks that make these massive gains? Well, there was a number of them that did this past week, but as I've discussed in past videos, there are stocks that do this just about every week. This week we had a particular number of big gainers, but most weeks there's stocks that make at least 100%, and they all have a few things in common. They trade with abnormal trading volume, they make an abnormal price movement early in the run, and then there's a very significant supply-demand imbalance. Now I want to talk about the third thing as it's kind of the most important. When we look at stocks, we can look at the number of shares outstanding, but the more important number is the float. The float is the number of shares available for the public to trade. If you have a stock that has less than 20 million shares in the float, but trades 100 million shares in a day, it's trading its float 5 times over. That means there's a lot more demand than there is supply of shares. Now, some of the biggest gainers this past week, and I'm going to show you one in just a moment, had under 1 million shares in the float and traded well over 100 million times or shares in the day. So in other words, it traded 100 times its float, even more. So let's dive into one of those stocks here. This is SBET. Early in the week, it was under $10. By the end of the week, on Friday, it went over $120 a share. But here's the thing. It traded 54 million shares in one day on the 27th of May, on a day when the stock only has 630,000 shares available. So you can imagine if there's all of these buyers chasing after a limited number of shares to buy, then you can really get a big move. So how do I find them? Well, I begin by looking for stocks that are up for the day. That's my first cut. I then want to cut that list down and look at the stocks that are also trading much more volume than normal. So we're paying attention to the demand side. How many shares are being traded? And then the third thing I check is how many shares in the float. So if I see a stock trading very abnormal volume and it's got 3 million shares in the float, that is now a prime candidate. And at that point, I just start looking for my different indicators, my action candle indicators, my wave up indicator, which I'll show at the end of the video when we look at the trade of the week. Now, if we go back to this stock, SBET, we're also looking for patterns. And so this stock made its first move on Tuesday, and it actually started in the pre-market. So you see here this big price gap. Well, there was quite a bit of trading in the pre-market to begin, and that's really where some of the best opportunities came. But it also made a break up from a rising bottom there on Thursday, and that led to this explosive gain. So you don't have to be trading in the pre-market on these stocks because they often make good setups. And you think about it here, that's at $50 a share, support at $42 a share, went all the way up to $120. So it went up $70 a share for about $8 a share in risk, and that's a really good reward for risk trade-off. All right, well, now let's get into this week's market analysis, and we're going to look at the S&P 500 first. So here is the chart. Just before I get into the chart, this is my website, Stockscores.com, and I want to draw your attention to the free weekly newsletter that you can get. Just sign up there. I don't send out a lot of spam or garbage. Just once a week, send out an email newsletter with my stock ideas and different trading concepts, a little bit of a look at the overall market. All right, let's dive into the S&P 500. And you can see it's been a pretty quiet week, not a lot of volatility, which is in some ways a relief after all of the volatility that we had through March and April. Markets are settling down. My concern is we're at a little bit of a falling top from the highs back in February, and that could set up for a breakdown if we get more negative tariff talk, negative trade war stuff. That could lead to another wave down. But until we break this upward trend line, we shouldn't get too worried. If we look at the long-term 3-year chart on the S&P, you can see that the long-term upward trend line is still intact. I can start here at the lows and just draw a line across those bottoms, and look at how perfectly you see the market hitting these inflection points and bouncing off. But typical upward trends are broken when you build a falling top and then break the upward trend line. Now we're a long way from that, but I don't think it's out of possibility that it could happen. So we'll watch that, and make sure you're subscribed to the channel here, because every week I do this analysis, and I'll let you know when I see the markets getting a little bit ugly. Let's move along to the NASDAQ 100 QQQ. And here you can see the same sort of thing, a nice bounce back rally, but not back to the highs. So we also have that falling top building, which is a sign of a little bit of pessimism, a little bit of concern. And that makes sense, because we know there's some deadlines on tariffs and that sort of thing that could, again, rear their ugly head. Onto the small cap stocks, and they really are outperforming the large cap stocks. And that's because interest rates remain elevated. Small cap stocks are more sensitive to interest rates, and we can see that in this chart. Now, with that said, when we talk about those low float stocks, those stocks that make the very biggest gains, guess what? They're all small cap, even micro cap stocks. So although this sector of the market is not particularly strong, virtually every stock that I trade as a day trader each day come from the really small companies, these low float stocks that behave abnormally, that have very strong demand with a low number of shares available. All right, let's move along to the Canadian market, and T.XIU is the symbol for the TSX 60. And unlike the US markets, the TSX has managed to break through to new highs recently. A lot of volatility, which means a lot of uncertainty. And I think we're probably going to get stuck here, but it looks a little bit healthier than the US markets. And that's because of gold. Gold has been very strong. And of course, mining stocks have a heavy denomination in the US markets, or pardon me, in the Canadian market. And you see that in this chart of the gold chart really helping to prop up the TSX. Now we do have some falling tops building here. It's really what's called a pennant pattern. So there's rising bottoms and falling tops. And as you get to the pointy tip of the triangle, you're going to break one way or the other. And of course, an upside breakout means we're going to continue the upward trend. But if instead we have a downside breakout and start to move through this floor price, I would get a little concerned about the direction of gold and probably want to sell off some of those holdings if that happens. Hasn't happened yet, but that's something for you to watch for if you are in gold or gold stocks. All right, let's take a look at oil. USO is one of the oil ETFs that I like to follow. Here's the 3-year chart, and you can see that we're at the bottom of the range going back to 2023, and it's really been a sideways market. We're probably stable above the floor price on this chart, but there's no sign that the buyers are getting interested. We're still in this downward trend. If we look at the 1-year daily chart, we can draw a trend line. Just start at the high and let that line fall until we hit that inflection point. And you can see that we're stuck under that. We're starting to build a little bit of rising bottoms, but I would say it's still a fairly ugly market. Maybe not a lot of downside, but fighting against pessimism. And that's why our sentiment stock score is at 31. Now, if you want to learn more about the stock scores, go into the trader training area of the Stockscores website, and there's a link right there, how to use the stock scores. And again, make sure you're registered for that free weekly email that I send out, because you will learn lots about how I approach the markets. All right, let's take a look at currencies now. UUP is the symbol for the US dollar. And if we just type in here, and you can see that the US dollar remains in a downward trend, so the sellers are in control. If we look at the 3-year chart, we are at support where the market should hold, but it's not a particularly good looking chart for the US dollar. The opposite can be said of Bitcoin. GBTC has been doing well. I like to look at this 3-year weekly chart, because there you can see just how often it just continues to build rising bottoms. There's all these bottoms that are rising over time. That means the buyers are in control. Now we are getting up near the top of the range. We still have a little bit more room to go before we hit the top there. But I think that if you're in Bitcoin for a long-term investment, it remains a hold. I don't know that I'd want to be a buyer here. I think it's getting a little extended after 4 or 5, maybe 6 weeks of upward movement. All right, finally, let's take a look at the bond market. TLT is the chart. And here you can see that we are in that bearish trend for the bond market. We are relatively stable the last little while, not a lot of weakness, but looking at this 3-year chart, you can see there, it's not a good looking chart. And that means the market does not expect interest rates to fall. This is a predictor of interest rates more than anything else. And the market is saying US interest rates are likely to remain elevated. So my ratings then, short-term bullish for the US large cap and NASDAQ, but long-term neutral, just again coming into resistance. US small caps, short-term neutral, long-term bearish. Canadian stocks, bullish on both time frames. Gold, short-term neutral. It is a little choppy lately, but still in that long-term bullish upward trend. Oil, neutral on both time frames. US dollar, neutral on both time frames. Bitcoin remains bullish, but I would say a bit risky. Short-term bearish on bonds, but at some support, long-term neutral. All right, let's get into the trade of the week. And now we're going to apply some of the things that we learned at the top of the video, where we're looking at stocks that have a low float, very strong demand, and abnormal price action. And if we look here, this is BMGL. At the start of the day on Friday, it was not on my list. There was no real abnormal volume early in the day on Friday. And then at about 10 o'clock, you see the volume start to ramp up. Now, I created an indicator to look for that. So I have this indicator scanning all US stocks second by second, looking for abnormal activity. And when you see these pink and yellow dots there, what that means is that there's abnormal buying coming in. So that's my first clue. I see a stock that's up. It's got statistically significant abnormal buying pressure. And now I know it's a stock to keep an eye on. I then check the float, and I don't remember the float of this stock, but it's low, somewhere maybe 3.8 million shares, something like that. It's quite low. And so then I don't want to chase strength. I want to buy pullbacks. So the pullback, and that's what these blue dots are all about. When we get those blue dots, we're crossing above the moving average and really breaking the pullback. So that was entry point number one. Now, because the scale of this chart is so skewed, it's hard to tell, but the stock was making a noticeable break of a pullback there. The second opportunity comes when you break out from low volatility. So again, there's your pink and yellow dot. That's my action candle. And you can use my action candle indicator if you're an active trader member of Stockscores.com. You can go to my website and learn more about that. So we have rising bottoms coming into resistance, action candle, abnormal activity, volume picking up, and that's our next clue that this stock wants to go higher. Now, to be quite frank, it went a lot higher than I expected. Usually they don't make this much of a move, but in this particular case, early entries were around the 160 zone, subsequent entries around 220, and the stock went over $7, I believe, by the end of the day. Certainly, I had to cut the chart off because the scale got so skewed, but here you see $6 at around 330, 340 in the day. So simple concepts, low float, abnormal activity, very strong demand, very abnormal behavior with a few number of shares outstanding. That's the recipe for trading these hot stocks. So I hope you've learned something in this week's video. If you did, click the like button, leave a comment. How do you approach the market with these very abnormal stocks? Love to see how other people are trading these things. And as always, I hope you've enjoyed this video. If so, click the like button, subscribe to the channel, and trade well.